Okay, I think we're about to start. Thank you everyone for coming. And first of all, I would like to thank George and the rest of the team at the House of Web3 and Edge Node. Um, for me personally, this has become home over the last few months while I was here in the area. And you guys are doing an amazing job.
Why are you leaving home then, Jakob?
Yeah, we can talk about that after during the drinks. Yeah, but thank you everyone for coming here today, and I hope you're gonna enjoy our session. First of all, let me introduce myself. My name is Yakov, and I run Hash Capital, an early stage Web3 venture firm. And with me today are my guests. Please introduce yourself.
Hi, I'm Anam Ahmed. I'm an attorney in the blockchain space. Specifically, I work with a firm called the Rodman Group. They're based out in Colorado. Yeah, and we're just going to talk about Web3 auth, and I'll let Zen introduce himself.
Hey guys, I'm Zen, and I run Web3 Off. I'm one of the co-founders. What we do is we replace seed phrases with an MPC multi-factor key, which you can use social logins like Google, Facebook, as well as SMS OTP and your devices to secure. We've been around for a while now, so we power some of the top wallets in the space. You might have heard of some of them like Trust Wallet, for example. We've worked with Fox.com, Universal Studios. We do about 10 million users a month or wallets a month or so. And yeah, glad to be here. It's great to meet everybody. It's a beautiful house.
Thank you. Yeah. So we're going to talk about adoption in Web3 today because right now we're in the stage of the cycle where many people have lost a lot of money. Many people have lost some hope. But many people, as I can see from the audience today, still are active in the space, including ourselves. And we would like to sort of brainstorm a bit, like what pillars of adoption are there and what's happening in general in the market, both on the regulatory side and on the product side, and on the big new entrants in the space, and what can be the next use case, something everyone is thinking about, everyone is talking about, everyone is trying to find an answer to. So we'll try to share our small bit of thoughts on that subject. And I would like to start with regulatory because clearly the last at least 6 months and arguably this last year has been a lot about that. And yeah, I can see Sean is excited already. So yeah, we're definitely gonna have a discussion afterwards as well. But feel free to jump in. A lot of stuff going on. I know that there are a lot of founders in this room, and I think an important question to address as a founder of a Web3 project is like, where should you be based? Where should you be set up? And how should you be thinking about that? And that's the first question I'd like to cover. And I think it would be useful to talk about the US versus rest of the world. Um, Share your experience of the recent examples you've been working on, and just maybe start with your take on what's going on with the SEC and their excitement about the space in the recent year.
Yeah, the SEC is very excited. I mean, I'm gonna start at the end of that. At the end of that question, um, the recent lawsuits with Coinbase and Binance. I want to separate them. Binance has some issues of fraud involved in it as well, and commingling of funds. So it's a little different. But Coinbase is the essential question of whether cryptocurrency should be seen as securities or not. And we could talk about that for hours about, there's like a struggle between the SEC and the CFTC and whether it's a commodity or a security. But at the end of the day, I think the Coinbase lawsuit, because Coinbase is vigorously going to fight back, as they've said, it's gonna set some sort of precedent for what's going to happen. And I think especially if Coinbase wins, Congress will be rushing to legislate. To be honest, if they don't win, I really don't see Congress rushing to legislate. There's too much. There's too many discrepancies. They're not even ready to get there or decide that there should be some sort of regulation, and they're sort of just ready to let SEC deal with this as they want to. So, not very positive news. I asked you before this if you want me to keep it positive, but aside from that, I mean, I don't think that should deter people from starting crypto companies in the U.S. And I don't think it will, even if SEC continues to hand out lawsuits. I think it's sort of a mistake that they've made, that they're going after all the big players, and it's like, if you're going to go after everybody, then it means there's something wrong with the system. You know, it's not an issue of the actual companies. So I think they're going to have to find a way to regulate around it eventually. But the trend we have been seeing is that a lot of companies want to move offshore. And I mean, there's a number of places, a number of jurisdictions, but some big ones are Europe. I mean, places in Europe like Switzerland, Germany even has quite a set out framework for crypto. The United Arab Emirates has set out a very detailed, well, it's not very advanced, but they have set out a whole separate authority for virtual assets, which isn't normal, right? They're not saying it's a security, a commodity. They're saying it's a virtual asset, and we have a whole separate framework for it. Singapore is one of them. So it is interesting to see that how companies are going to be moving out of the US and functioning in separate locations. Yeah, I mean, so I've seen a lot of Cayman and BVI setups as well, but it's hard to say where you should go, because it does in the end depend on so many different factors, you know, like what costs you're willing to put in or where you want to operate. So I mean, I'll let Zen talk a little bit about Singapore and how his experience has been setting up in Singapore.
Yeah, so we're Singapore Incorporated in particular. Well, first off, how many here are founders or are trying to start a company? Oh, that's a whole lot of you. Okay, I see. So like, yeah, we started in 2018, early 2019, and incorporated in Singapore in particular. Singapore in specific has very black and white rules, almost to the point that they're actually taxing already on. So for Singapore, we were super popular during 2017, 2018, during the ICO boom. A lot of people, China banned crypto at that point. So a lot of people went off, and Singapore was kind of like the location that a lot of these Chinese ICOs would ICO on. And it's all okay as long as you pay tax, basically. It's like they consider it goods and services. So you pay goods and services tax for an ICO in particular. We personally don't have a token, so it hasn't been as much of a concern. And banking is actually quite crypto positive in Singapore. Like the banks don't close your bank accounts. You can kind of operate quite publicly as a crypto company. You can also not operate in Singapore. You can just set it up and just disappear and like be in America or something like that. So in that way, I do think it's quite convenient in particular. I've heard Dubai is easy to get like a citizenship or at least permanent residence in particular.
Right, residence, not citizenship, but especially if you're a crypto company, they're really handing out visas.
Which is nice. So you get to live there. Singapore doesn't do
nice.
that. Singapore does not give you that. Yeah, I mean, I think Singapore is definitely an attractive space. Come. I'll show you around, bring you out to eat.
Yeah, well, all of us really want to visit Singapore. I think what we should.
I'll say one thing negative about Singapore though.
Please.
In Singapore, you cannot find devs. Like devs are non-existent in Singapore. All of the good devs come to SF or come to America. So you are left with all the terrible ones. In the end, you have to hire from like, like overseas, like India, Vietnam, it's just that not that big a talent pool. So the tech is kind of sucky.
Yeah, we've touched a bit on the SEC going against the big companies, and primarily they are going against the exchanges. And with the market infrastructure developing as it is, it seems like it's maybe moving a bit from the exchanges to the wallets, like the power um, uh, of control over the user. And given that that is the space which is clearly where you're working, and that I believe will ultimately be the more powerful kind of gang in this market. um, what are your thoughts on like the recent regulation with regards to wallets specifically, and custodial versus non-custodial wallets
Mm.
in more detail?
So actually, most of the regulation as of late hasn't touched that topic in particular. As a net regulation coming from the US. So for us in Web3 off, how that pertains to us in general is we we want to be classified as a non-custodial infrastructure, and that's because a lot of companies don't want to deal with custody. They don't. Custody means you have to have a money transmitter license. It means you have to potentially supplement that with insurance. It means you have to do a whole lot of stuff just to hold crypto for your users in particular, which is the main reason why everybody wants to be classified as non-custodial relative to custodial. Um, with regards to with regards to like regulation on wallets in specific, most of the recent stuff hasn't been on wallets. And but like it was about I think a year and a half or 2 years ago when there's been no concrete legislative like measure or anything like that, but there were like proposals and bills which were being drafted, and it is somewhat positive in that a lot of them I think defined, at least in the US, defined a fine line between custodial and non-custodial in particular. And it was quite, I mean, I remember Twitter going up in flames and saying, yes, yes, it should be non-custodial. But it's important because in particular, non-custodiality also allows, like if you read MetaMask's terms and conditions or any non-custodial wallet's terms and conditions, they actually put full liability on the end user. And they say that, we won't be liable for like stolen stuff, losses and all that because we're non-custodial, we don't keep your money, it's all on you. I think when we expand, so for us, we've tried to pursue legal opinion for non-custodiality on behalf of both our customers as well as for ourselves in different jurisdictions. And we haven't had a hiccup in getting that in particular. Like we've managed to do it in US, in Korea, in Europe, in Singapore, and which just kind of, and like some of our clients are able to as well, like Fox.com, Universal Studios, which just kind of outlines that it's something which lawyers are at least comfortable with backing. Like firms are comfortable with like offering their opinions and not being like attaching their reputation to it at least. Yeah, I mean it's not a really hot topic, I think.
I agree that, I mean, non-custodial wallets have still been pretty unregulated and they've been given space even in the US. But recently the EU came out with their MiCA, the new authority that they're setting up, and they do still have some disclosure requirements for non-custodial wallets. And I think one of the initial drafts had for a certain dollar amount of a transfer, it was almost the same regulation as a custodial wallet, but they dropped that eventually. I still feel like all the governments want to have that information. They want to know what you're doing with your non-custodial wallet. They're going to come after it. Eventually, it's going to become regulated. It's not going to stay this way for long. I mean, obviously, the reasons are somewhat legitimate. There are concerns about money laundering and where that money is coming from, aside from the fact that the US dollar is the currency in which all all other sorts of illegal activities are happening. But you know, um, it's definitely going to be regulated eventually. It's just going to take a little bit longer, I think, because it's just hard in for them in technicality to figure out how to do that.
Would you agree that there has been drafted a line between custodial and non-custodial? No, like they actually treat it differently, which is a
Yeah.
good thing.
Yeah, they do. They do, and there should be, in terms of liability. If you're a custodial wallet, it's that exchanges or that custody services job to protect, right, and to ensure and to do all of those things. That's
Do you think that difference will stay? Like, companies, I mean, governments definitely do want to track more and do want to, um, yeah, just track more in general. But do you
Yeah.
think it will stay as being different, or do you think they'll try to merge it in particular?
No, I think it'll stay different. I think it'll stay different. I think it'll depend on the model of the custody service. Do they want to hold the liability? How much do they want to be responsible for it? Yeah.
Right.
Yeah, and I think for the benefit of everyone, Zen, maybe you can elaborate a bit on what you guys have been doing recently with the large wallets and how your model actually works. So, what do you mean by being like a non-custodial wallet, and what exact service you provide to the partners of yours?
Yeah. So I think to expand on kind of like the definition of non-custodial or self-custodial is actually quite different depending on who you ask. Uh, and so most, like if you ask somebody who's deep in the crypto industry, right? Uh, most of the time they'll tell you that self-custody has two properties. The first thing is that nobody but the user has access to their public-private key pair. So this includes where it's stored as well as who can access it. And then the second one being that nobody can deny me access to using my public-private key pair in particular. I think these, number one always needs to be true, but number two, depending on who you ask, they'll go like, maybe, maybe not. And I think that's kind of like the ideal definition of self-custody or where it's driven to. But when we talk about it in legal terms, right, most of the time we don't talk about the definition of self-custody, but we talk about being non-custodial and specific, which is rather thinking of it on a more individualistic level. I, as an individual, don't have access to my users' funds. I, as an entity, don't have access to my users' funds. So I think, and this becomes, so when we think about it with seed phrases, right? Seed phrases are quite simple. It lives on your device. You may write it down somewhere. Both of these are kind of yours in a way. You own your device, you own the piece of paper it was written on. But it gets a little bit more complicated when you talk about like multi-sig setups or in terms of Web3 auth MPC. So MPC, for those who aren't aware, is just like a multi-sig, except it's off-chain. It's basically you split a user's public-private key pair into multiple different parts, of which you need threshold number of parts to access or use your public-private key pair. So this could be 2 out of 3 or 2 out of 2 or 2 out of 5 or whatever. And ultimately, this means that you can have a setup where, let's say you have a 2 out of 3 setup, and you have one factor on your device, one factor on your mobile phone, so one laptop, one mobile phone, and then one kept on a server, for example, kept by a third party. Is this custodial or non-custodial?
It's non-custodial.
Oh yeah, fantastic. Yeah. So I mean, I think that's what we generally try to push for in particular, and it's because by definition, one factor of your key can't access a user's public-private key pair. Therefore, the properties that we described 1 and 2 are still true in this particular 2 out of 3 setup. And I think for us with clients, we push clients towards more self-custodial setups to be implementing more of these in general. But we also support like semi-custodial setups, like custodial, and as well as self-custodial setups. And then
yeah, and maybe
the rest is a bit gray.
Maybe you can elaborate a bit on like from the adoption standpoint. So when a typical user, just trying to set up a wallet, how big of an issue is it still that he's experiencing with the seed phrase? Like how many users are lost along the way? how is that looking today, and how's that evolved over the last couple years?
So it stayed around the same, actually. Typically, an application of seed phrases has about a 23 to 25% conversion rate. So if they download your app, there's a 23 to 25% chance they get past your onboarding phase and actually start using your application. Uh, if you think about it, that's just terrible. That's 1 in 4 users you're just losing. In 3 and 4 users, you're just losing right off the bat. With normal social logins and a normal familiar user experience, which we provide, um, that number usually goes up to about 55 to 60%, which is where most normal applications, which are not crypto, live in actually. Most applications live in about 66% range. So yeah, I mean that's more or less the numbers. I don't think it's changed too much. It changes according to application type that you're on. So in particular, if you're a DeFi app and you're really degen and like it's a high value use case, your users in general are a little bit more, they don't mind going through a little bit more of a tough education and onboarding phase. But if your use case is a little bit more casual, like it's a game, like it's NFT, if you're going for more mainstream users in particular, they definitely care a lot more.
Yeah, and that's exactly where we're headed, to the to non-DeFi specific applications necessarily, because clearly whoever is heavily using DeFi can cope with that issue of not losing the seed phrase, though not everyone. That does happen from time to time. But where do you see that primarily being necessary at the moment? Like, where do you see the biggest inflow of users for which are kind of sensitive to this issue, and what do you see is happening from that standpoint just over the last uh, 2 3 months
So I
post
think,
the DeFi bubble?
yeah, so I think where our users come from are generally um, from 3 main buckets, which is uh, like existing Web3 wallets. So wallets like Trust Wallet, like Kepler, Kukai, the list goes on. That's one big segment. So just general users. And then it's gaming in particular. So a lot of gaming wallets being created. And this is also like one gaming wallet. The magnitude of users that come in Web2 are different from the magnitude of Web3 users. Like in Web3, if you have 2 million like wallets a month on a wallet, you are one of the top wallets basically. Um, and but in Web2, like a mid to low tier game gets 2 million users a month in particular, right? So it's definitely a larger proportion coming from that. And then the third one is just large Web2 brands. So brands like Fox.com, Universal Studios, often it's like luxury or IP brands that kind of are either trying to issue some sort of NFT play, or more recently, they like to coin the term loyalty programs, because NFTs is out of style, but if you call it a loyalty program, it becomes cool again. So it's been more of that actually in the last 2 or 3 months with regards to big brands.
And maybe just a couple words on the competitive landscape. So PayPal has recently got into the round for Magic, and this looks like one of these Web 2 to Web 3 transitions that we'll talk about in a minute a bit more. But how's it looking, and what is the difference
So
between you guys?
Magic is definitely our largest competitor. I think we're quite equal when it comes to metrics and numbers, but in terms of fundraising, we're quite different. Uh, good job to them, and congrats on what they've done for sure. I think, I mean, the main difference between Magic and us is on the UI UX experience, we're actually very similar. When a user uses Magic and uses Web3 off, it feels exactly the same. But under the hood is where the difference lies. We use this MPC split key tech that I talked about, and we're legally non-custodial by nature. But Magic, I think, Magic architecture is basically AWS HSM. So they encrypt a user's key with AWS HSM and then keep it on their setups. And that's governed by a authentication layer which they manage as well. So like a Google login or passwordless or magic link, right? I mean that's just inherently more not more custodial in particular. It's either custodial at worst custodial to AWS, at best custodial to Magic themselves. Um, yeah, I mean I think it's just custodial versus non-custodial. That's the really core difference.
Okay, and from that, I think we should move forward to the other cases of Web2 companies going into Web3. So, okay, PayPal with Magic. I'm sorry, Zan, but I couldn't help asking you the question. They're clearly going there for some time, PayPal, and
So PayPal actually, before they invested in Magic, they've invested in quite a few Web3 projects, not just Magic in particular. And they've also they acquired this startup called Curve, I think for 200 or 300 million. Don't quote me on that, something like that. Back in the day, which used MPC for like air-gapped setups in particular. Um, I don't know. You know, sometimes companies with a balance sheet like PayPal and revenue like PayPal and like how, like 100 to 200 million isn't that much money when you count that when you compare it to the revenue that you're getting, right? It's decent but not humongous, I think. I don't know. They didn't do anything with Curve, so I don't think that necessarily validates that they're really diving headfirst. They're using Magic to say, um, uh, what I have seen, and especially because of legal regulations, right, in US and them being US
Don't
based.
point at me. I didn't make them.
No, but but it's just I think it's a tough time for everybody in US. What we've started to see is that like US. So we had quite a few US customers talking to us. Like it was I think Robinhood for a while, and then Mastercard and Visa. And then after FTX, everybody went silent, and all of those projects were basically like, okay, if we bring like a Web3 project to our board, we'll get slapped. Like I can't talk to you, Zen. You're taboo now. Like but I think the East, as we go more east to both Europe as well as more of like APAC, like Korea, Japan. Japan was quite strict on crypto previously before, and so they've been saved from like the most recent wave of scams. But what we found is a lot of them are now a little bit more keen to get back in. Korea, although they were burned very hard with Terra, they're still very keen. I don't know, they're just crazy. Um, and then I mean, China naturally is changing the stance on things in particular. So I think like it's very like demoralizing in the West, but I think as you go more east, people are a little bit more receptive. Um,
and maybe you can give a couple examples from Dubai and the region. What companies are entering the Web3 space that are more traditional?
So I know recently Gemini set up its operations in Dubai. There's a lot of other companies. The thing is, the authority, it's called VARA, Virtual Asset Regulation Authority. It's so recent that nobody is officially licensed with it yet. So there are crypto companies out there that are in the process of getting their licensing out there. In Dubai, actually, sorry to go back, but they don't make a distinction really between custodial and non-custodial
interesting.
very clearly. It's sort of in the language, but because no licensing has gone through, it's hard to say if they're going to try and regulate. But like you were saying, in the East, it's so much more receptive because here they're leading with litigation, they're leading with enforcement, and that's so aggressive. I know I hate to go back and mess up the order of your panel, but in if you look at Coinbase, even Coinbase has tried on so many occasions to talk to the SEC. I mean, they have spoken to the SEC, the CTFC, and they've sat down. They've asked, how can we cooperate? How can we make sure that we're in line with your regulations? And they just haven't given them an answer. Instead, they've sued them. So that's what's not happening in the East, right? There's a lot more cooperation, and we're seeing companies come out there much more than out here.
Yeah, absolutely. Okay, and the last one from my end, because I feel like everyone is getting thirsty. So where do you see, what do you think will be the next wave of adoption in the market coming out of this cycle? What do you think will be that DeFi summer, NFT boom, or whatever you can come up with that will drive the next big wave of users to the wallets primarily and to the market in general?
I think there are quite a few different bets that people are taking. Uh, and I think one thing which I find quite interesting that I've seen quite a few different companies trying to approach is just simply emerging market stuff. It's I think I think a lot of us in companies which I mean in countries which are a little bit more developed, like Singapore, like US, especially with our financial system, take financial access and access to like investment opportunities very much for granted. Um, and I mean, if we just take a look at the last boom and where it came from Vietnam, it came from Philippines, it came from emerging regions in particular. So I think there are quite a few different bets. For example, I mean, companies that are taking bets like Jambo in Africa, targeting that space, launching phones. That's pretty interesting. There are quite a few companies coming out of Vietnam uh, trying to like do microfinancing and whatnot. Um, I think that's in particular quite interesting, and that might be something that we've. I think we've already seen crypto give value to certain emerging markets already as a stock market to play on, as an investment, as a way to allocate capital that you might have in these emerging markets. And I think that is just one that has still room to grow in particular. I mean, the other ones, all of you have probably heard, like your social applications, I think identity maybe in like digital wallets in Europe with Mika. It was also a large digital wallet play in particular. They're doing DIDs, which have nothing to do with blockchain. I mean, can have nothing to do with blockchain. But I'm sure blockchain will seep its way in. Yeah, I mean, what are you saying?
I mean, I think we touched on it a little bit earlier, but gaming would be a huge market. But I don't know what your experience has been, but I feel seen that the gaming industry has been a bit
Aggressive.
yeah, and the
You know what's the biggest thesis against Web3 gaming? And this is like
that
less
it's
hope.
that
Is
it's
Roblox?
yeah.
Roblox is a fantastic economy, all without blockchain. They have a currency. They have kids doing slavery work, and it's but it's all about
They
blockchain.
cannot get out. That's the problem. That's the problem.
Yeah, maybe they need it. Maybe the kids need it.
Yeah, I think they want to. Okay, thank you very much. Thank you all for being here. If you have any questions, we'll be happy to take them.
Thank you, George.
You're welcome.
So on the wallet side, considering that, let's say, Apple at some point is going to own all the biometrics and can authenticate me and then map me to whatever data is associated to me, how does commercially, not technically, commercially, how does the wallet category of companies see the timeline for exit?
So, timeline for exit. Can you define what exit means? Like them being rich, exiting as founders, or?
Is the goal to build a 10-year company here, or is the goal to flip it before these biometrics are ubiquitously available?
Right. So with regards to biometrics, actually on Apple as well as on Android too, right now, actually, all of these biometrics don't leave your device at this point. It follows a standard called WebAuthn, which 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 means that the biometric templates don't leave your device. That said, right? That said, a crypto wallet implemented by Apple or by Google. Imagine like Chrome just implements a wallet inside it natively instead of using MetaMask. Then boom, MetaMask dead. Or like Apple does it on the phone itself, or on the App Store. I think I mean, I think maybe it's a buyout. You know, maybe you get bought out, and then they use your software to kind of use that. Or I think there's also an argument to say that wallets. Look at the ecosystem today. The wallet ecosystem is super fragmented. There are some of the largest wallets, of course, but there are so many other wallets that exist today because each wallet has their own particular use case that they derive themselves for. Be it like staking, be it like your particular chain that you're on, be it like swaps or whatever or whatnot. All of them have their own particular USP. Um, and there's also an argument that goes like this will continue to be the case. Like Apple can build a wallet, but your wallet will be limited to specifically maybe holding crypto instead of actually interacting with that because it's just physically, it's just engineering wise too many use cases and unstandardizable. So I think, yeah, I mean, it's anybody's guess how the future plays out, but it can go in the way that you've suggested. It also can go in the alternate way where it doesn't centralize. Also, like they may launch a non-custodial wallet, but also like Web2 identity systems are inherently custodial in nature. Like Apple recently launched social recovery on Keychain, right, which allows you to add friends and stuff. But all of that just happens on the Apple login itself. Apple can still reset your account. Apple still owns your account. Apple still exists in that manner. And would they want to give that up on such a short, in such a short timeline? Isn't it beneficial for them to hold that as long as possible? So there may be an incentive disalignment to enabling that in mass.
Thanks for the second half of your question. That's a good segue actually to my question. The second half of your answer, it's a good segue to my question. On the SEC side and back towards Coinbase and creating this sort of ambiguity between this bright line between custodial and non-custodial. It seems to me in the SEC action against Coinbase that there's some creeping sort of action against Coinbase Wallet and the non-custodial aspect of the Coinbase Wallet action. So it would seem that that bright line is not as apparent in some of the attempts that the SEC is doing, and some of the other parallel or linked actions against Coinbase specifically, but not exclusively Coinbase, also against Kraken prior. One of the things that didn't come up in the conversation about regulations is against rather than unregistered securities, unregistered investment contracts with staking, and to have a little bit of conversation potentially about the applicability of actions, enforcement action against staking, and how that might affect the tokenomics and the design of blockchain and certain sort of product sets, and the securing of those product sets with staking, and how those could be more risky as a design scenario, unless, as you rightly said, it seems that there are some carve-outs that are being put in case for in-game app tokens. It seems that there are some very explicit carve-outs that are being secured in pending legislation.
Well, with regards to the Coinbase lawsuit, I think, well, Coinbase is custodial, and so them saying, right, and them making these differentiations between or merging custodial and non-custodial is sort of a lot of your question goes back to the fact that you need Congress to come in and regulate. It's the SEC lawsuit is not enough to set precedent for all the issues that are going to come up. And yeah, I mean, maybe you are right that there is going to be some sort of merging of custodial and non-custodial eventually. I mean, like you were saying. But I don't see how the lawsuit in itself could legislate for all the issues that are going to come up.
I think it's going to be one big blanket yes or no first, right?
Yeah.
And there's no way they're going to get into that fine detail. Of
Right.
like,
Right. Exactly. Yeah.
Yeah, so sort of jumping on to that, I've heard some convincing arguments that sort of state that the SEC isn't really a regulatory body, but more of an executor of executive branch policy, and that a lot of their actions make a lot more sense in that light, where they sort of ignored sketchy on-chain data for Celsius, et cetera, before the FTC collapsed. And then after the FTC collapsed, they sort of saw, okay, well, now the sector is vulnerable. Let's try and take everything down. And I was curious if you guys sort of agreed with that or disagreed with that. And what if the problem isn't like regulatory stuff, but rather this feeling of crypto attacking economic security interests of the United States?
You mean Balaji's argument? Go ahead.
I kind of agree with you. I don't think this is the SEC's territory at all. I actually am I'm more inclined to believe that the CFTC should take over, which is, I mean, they're more, like you said, it should be considered a commodity, and it should be considered, what we should be considering is how to make sure that the economy is fair, it's transparent, and we could have the anti-money laundering and we could have the anti-terrorism, but to have it treated like a security would just, I mean, it would completely collapse the crypto industry, because the I think the biggest issue would obviously be how you are going to get retail investors if it's so restricted and it's so regulated.
Yeah, I largely agree with everything, but I think, if we think very simply about what happened, it's like, Gary got burned from FTX, from believing in FTX, and then he has a lot of political will to go after the crypto industry.
Well,
And then
did you
a bunch of
see
them-
the Binance just said that Gensler wanted to be a consultant for Binance in 2019.
Oh, really?
Yeah, the lawyers just
Yeah,
came
all
out.
the more. He just got burned by it and super toasted. He has like a personal vendetta, and then everybody in politics goes like, okay, you chase after them, yes, and then and creating an establishment specifically for crypto legislation would be giving it too much credibility, right? That's like a positive step, but they want to throw a negative step into it, and then, I mean,
Yeah, I do think it is very, not to get into politics, but it is politically motivated as well. There's certain, there's Gensler wants to get, I think he wants to get into like the Treasury Department, and he wants to get on their good side, and so being anti-crypto serves him well, but that's a whole other thing.
Hello, everybody. Thank you so much for the wonderful panel. Currently, in this economic state, a lot of people are in debt. So imagine, right, the velocity of money is moving tremendously, especially with taking advantage of cryptocurrency. So what I've been reading a lot is what you guys have been kind of talking about recently, is that, what if the Federal Reserve comes out with their own digital currency? This can even help the debt settlement in the United States, can get rid of that a lot faster. And then if that does happen, do you think that they're going to force us to use a custodial wallet, or will we still have access to non-custodial wallets?
so if the U.S. government launches a digital currency in the form of like a cryptocurrency or a blockchain, it doesn't matter whether you're custodial or non-custodial wallet, because they can just edit the ledger to take your money away. So it really just doesn't matter. I think, I mean, that's the only point I had. You know?
Yeah. I mean, it's an interesting concept. Yeah, I don't know. I hadn't really thought of it. So I guess that's all the thoughts we have collectively.
So, I mean-
is that one thought?
I mean, I think like creating a digital currency isn't a panacea as well. It doesn't cure your debt. It's like you can issue a digital currency, but that's just issuing more USD
Right.
into the ecosystem. That's still debt. I mean, I don't doubt that it's definitely more efficient than cash, but like, I don't know.
I think she's suggesting that they're clearing out all the competition and then they have their own, and then they start having, they have their own,
that everybody rallies to USD.
right.
USD Connect.
Are you suggesting to launch it instead of the dollars, or just like forget about
Eliminate
all,
the dollar.
all the existing obligations? That could be pretty neat.
Hey, how's it going? I'm curious your thoughts on smart contract wallets. I think right now, all you need to do for a wallet is like, how do we set up the key? Are we going to store it on MPC? Are we going to like just give you a seed phrase, whatever? And all the functionality is basically the same, right? But let's say I want to make decentralized Uber, and then I need like chargeback functionality, or I want to make a game or social network. I'm probably going to have like arbitrarily complex custom logic for whatever this user wallet is going to have. So just curious how you think about that in your long-term roadmap, where long-term most apps are probably going to have like custom contract wallets rather than just like a generic EOA.
Yep. We're super excited about smart contract wallets in particular and account abstraction. In fact, out of the, I think, 8 account abstraction SDKs out there, be it like Safe, Economy, UseKeep, Zero Dev, Unipass, I can keep going. But like, I think out of the 8, like 6 of them are integrated with Web3 off directly. And we're big fans, and we think that like on-chain computation is fantastic and customization is fantastic. I think that the time frame in which this will happen, though, is not as short as I mean, it's coming, but it's not coming so soon. In particular, the main problem for me with it being adopted all over the place is the unit economics of it. Right now, if you deploy like a very simple ERC 4337, EIP 4337 deployment on like Polygon, or like, so Polygon is like maybe 18 cents, or if you get optimized. If you do it on main chain, it's still $25 or so. If you do it on StarkNet, on the pro, which apparently it's implemented on a protocol level, it's somehow still like 50 cents. So like, can an application fork out 20 to 50 cents per user as just pure network fees? And I think the scope of applications that can do that are only high value applications. If you're using it in a low value setup like gaming and stuff, they aren't going to be able to afford that at this point in time. Yes, there are EIPs that will bring down the costs by maybe 3 times. Like the data one, I can't remember what that one is called. And I'm looking forward to that. But until unit costs become, I think, less than a cent, it's going to be hard for low value use cases to pick that up.
Hey everyone, thanks for the panel. I want to talk about gaming. You guys touched on it for a minute, and this conversation is getting a little depressing. So, obviously, Web2 gaming is a huge industry globally, and there's tons of Web3 developers out there building games. But what do you feel is the biggest blocker to the transition from Web2 to Web3 gaming? And what do gaming developers and infrastructure companies need to focus on in order to facilitate that transition?
Well, I think the Web2 gaming industry is hesitant to get involved with Web3. They see it as bigger companies coming in for a cash grab. I think the Web3 gaming that currently exists is just not up to par, and so the samples aren't great. But I think once it is adopted, I think it is for the larger benefit of the gamer, like the consumer itself will benefit a lot from it. I mean, skins and products and all these things are huge, right? It's
I
like,
actually think that that's the biggest problem, actually. Because you know how, I'm not sure, has anyone played TF2 or like CSGO? Do you remember like, just I think maybe 10 years ago in particular, the Steam market used to have like a 2% fee when you traded them, when you traded skins and stuff like that. But then they realized that their loot boxes weren't giving them as much money. Because when you allow trade and you sell a loot box, typically if there was no trade, the user would have to buy the loot box until they got the item that they wanted. If there are like 5 items in the loot box, they'll have to buy it like, I don't know, maybe 8 times to have a 80% percentage to get the item that they want. But if with a free market, instead of buying the loot box 5 times or 8 times, you would just buy the item on the free market, and it would be 1/5 the cost. And so they implemented like first you can't like embargo, so you can only trade it like 6 months afterwards, and then they have a 30% tariff on top of trades, which. And nowadays, if you take a look at more of the popular gacha games and stuff like that, they just don't allow trading because they just want you to buy loot boxes. They just want you to give them money. So why would a big company give that away, if you think about it? Why would a AAA studio go, if the user appreciates
Right.
it and
If
they get
the
more
u-
popular
yeah.
because of that, maybe it's us, maybe the consumer's the problem.
Yeah.
Yeah, I'll just add to that we're still yet to see a good Web3 game, because whatever we're seeing right now is just a sandbox, essentially. And there have been, a few of them announced, like Illuvium, like the sandbox itself, and a few others. But this is nowhere near what the gamers are used to in the existing Web2 gaming market. And moreover, not all games are Web3 kind of suitable. None of them are Web3 compatible. And if you get a Web3 gaming, you need to have interoperability between the games, because that's ultimately what makes it so attractive, right? And it's hard to imagine one big world today where all the games live, because it's just not the market structure as it is. But I believe that's, if we talking like super long-term future, that's how it should be architected.
Like that said, like I do think that although NFTs were overhyped last year, and towards the end of even the year before, I do think ownership has true value in particular, and I do think that the community appreciates it to an extent. And I think just as much as it was overhyped previously, it might be like a bit underhyped now with how much people, with just sentiment,
Well, thank you everyone, and
Thank you guys. Thanks for having us.